Hello everyone, this is Lee from Group 7, Paper 36, Lecture University. Today I am so delighted to be here to present about the financial analysis of Cochlear Limited. Our presentation will include 6 parts, which I am showing you in the slide right here. So firstly, I'm going to introduce to you about the background of the company as well as the medical and surgical equipment manufacturing in Australia. Cochlear Limited, located in Sydney, Australia, is a company that works in the medical technology market, especially in the hearing solutions area. The industry includes firms that design, manufacture, and distribute hearing equipment such as cochlear implants, hearing aids, and related accessories. Cochlear Limited is a global player in the sector. Australia's medical and surgical equipment manufacturing industry is an insignificant but vital one. According to IBIS World Statistics in 2021, the sector has grown steadily throughout the past 5 years with an average growth rate of about 2.3% between 2016 and 2021. The industry is made up of both huge global corporations and smaller domestic businesses. Cochlear Limited, ResMed, Ansell Limited, and Nanosonic Limited are among the significant participants in the Australian medical and surgical equipment. Secondly, let's talk about the strategy analysis of the company. About the key success factors, they have very innovative technology. Over the years, Cochlear has made significant breakthroughs in the implant designs, electrode arrays, signal processing, and stimulation methods. Additionally, processing a broad, rich, and well-established ties with healthcare practitioners and organizations ensures that Cochlear's products are available and accessible to prospective consumers. Moreover, Cochlear works together with medical professionals that include audiologists, ENT specialists, surgeons, and rehabilitation specialists to have better performance. Especially, Cochlear meets regulatory norms and rules in many nations and areas across the world. About the risk. The first risk is changing regulatory framework. Changes in legislation, rules, and standards both locally and globally may have an impact on the company's ability to get and maintain appropriate products and approvals. In addition, they have to face product liability and security. Malfunctions or breakdowns can be caused by design flaws, manufacturing problems, component failures, or software issues. Especially, economic downturns, currency fluctuations, and financial crises can all have an impact on Cochlear sales volume, price, and profitability. Now let's talk about profitability using FIFO's framework. About the industry rivalry, it is very high because Cochlear competes with market leaders such as Advanced Bionics and Metal. About the threat of new entrants, it is very low. The medical device sector has significant entry barriers, especially in the market for hearing implant devices. About the bargaining power of buyers, which is very medium. As a result of restricted number of alternative possibilities, customers' negotiating power is decreased. About bargaining power of suppliers, which is also medium. Due to the specialized nature of the medical device industry, extensive coordination between manufacturers and suppliers is often essential. Lastly, we have the threat of substitutes, which is low. Cochlear hearing implant systems are one-of-a-kind cutting-edge treatments for people with profound hearing loss or deafness. Lastly, we'll go through competitive and corporate strategy analysis. Cochlear using innovation and R&D, which is research and development, partnerships with an alliance by cooperator with professionals and audiologists. They also use corporate social responsibility by raising awareness about hearing health, financing charity projects. And they also use product differentiation strategy, customer-focused strategy to gain the performance of the company and compete with other competitors. So after me, Tuiling's gonna present about the financial analysis.
Talk about the financial analysis of Cochlear Limited. The first one is common size analysis. A higher net income of Cochlear Limited contribute to a higher return of equity as it reflects the Cochlear ability to generate profit from its operation. This is a positive sign for investors as it indicates that the company is efficiently utilizing its resources to generate return. A higher return of equity also suggests that Cochlear is effectively managing its debt and equity as it able to generate profit without relying too heavily on borrowed funds. Besides the balance sheet, Cochlear Limited experienced fluctuated in its current assets over the span of 5 years. The company cash position show an increase in 2020 but experienced a minor decline in 2021. A decrease in ratio of total ability to total assets signify that Cochlear Limited has reduced its dependency on debt financing and has achieved a lower level of financial leverage. This is can regard as a positive sign, as it indicates a potential lower risk profile and enhanced financial stability for the company. The second one is profitability. We will talk about the return of equity and return of assets. The first one is return of equity. Factors that influence return of equity, including increase in debt and decrease in assets turnover. Taking more on debt can increase interest expense and reduce net income. A lower asset turnover can lead to lower net income and consequently a decrease in return of equity. The decline in return of equity from 2017 to 2019 suggests a decreasing ability to generate return on equity during that period. Possible contributing factors could include declining profit margin, decreasing asset efficiency, or change in financial leverage structure. The second one is return of assets. The trend of return of assets is in 2017 the return of assets was 12.56%, and in 2021, there was a recovery in return of assets to 18.29%. The factor that influenced return of assets is that increase in total assets. If the company experienced a significant increase in total assets without a proportionate increase in net income, it can lead to decrease in return of assets. The third one is operating management evaluation. Both NOPAT and EBITDA of Cochlear Limited increase. It generally indicates positive performance and financial health. Increasing EBITDA reflects the management effectiveness in growing the company operating profit. It demonstrates successful business strategy, market expansion, optimization, and efficient resource allocation. The company EBITDA has grown strongly, high profit because the company is leading cochlear implant with major industry. The company is in the transition to business phase thanks to the technology change, so it's easy to achieve this. The fourth one is investment management evaluation. This will include market volatility and medical device demand. The first one is market volatility. Stock price and market circumstances change as a result of uncertainty regarding to the pandemic effect and longevity. Investment managers were required to regularly monitor market trends, evaluate how they will affect the healthcare sector, and modify their investment strategy as necessary. The medical device demand. The pandemic had an impact on market for medical device, particularly cochlear implant, because it prevent elective procedure and decrease the number of patients who visit hospital. And the last one is financial management evaluation. The current ratio has increased, showing that the company ability to satisfy short-term obligation with short-term assets has improved. The fast ratio fluctuates due to variation in the company ability to cover agent urgent liability. A greater quick ratio indicates that the company has a stronger liquidity position since it can meet its short-term obligation without relying largely on inventory or less liquid assets. Furthermore, over the last 5 years, the company's solvency ratio, notability, the liability to equity ratio, and the debt to equity ratio have decreased significantly. This shows an improvement in the company financial health and long-term viability. This ratio measures the company leverage and the debt to equity ratio in its capital structure.
So, to forecast the Cochlear Limited, according to an analysis of the COH company financial performance over the previous years, sales growth has been consistent and steady. We can predict a similar trend for the subsequent 10 years with a few minor variation using the average ratio of the previous 5 years. It is anticipated that sales will grow at a rate about 25% over the following 10 years, which is a bit slower than the growth rate in 2021. This might be explained about the other things by heightened competition in the market, which might result in a decline in the market share or a shift in the consumer preferences. Changes in the economy may also have an impact on the level of demand for the product or service as a whole. In addition, it is anticipated that NOPAT margin will drop from about 21% in 2021 to about 18% in 2031. This may be a result of a number of factors, including rising production costs, heightened competition, or adjustment to pricing policy. The company's profitability and cash flow generation could be impacted by the declining NOPAT margin, which would make it more difficult for it to pay long-term obligation. Last but not least, the anticipated sharp decline in the dividend rate percentage from 53% in 2021 to about 8% in 2022, 2031 suggests that the company is placing more of an emphasis on reinvested profits in the business than on distribution to shareholders. This may be a calculated strategy move to fund business expansion or investment goals. According to the data, the COH company will experience moderate sales growth over the course of the following 10 years, while its NOPAT margin will be on the decline. To counteract the anticipated decline in the dividend rate percent, the company will need to effectively manage its working capital, modify its capital expenditure, and keep an eye on its debt level. To ensure long-term success, the company must take into the account a variety of variables that could impact the market and modify its strategy accordingly. Now, to credit analysis and detection of earning manipulation. Let's look at this Z-score, the required variable. Cochlear for the years 2017 to 2021, Cochlear score was as follows: minus 2.46212 to minus 2.0983. This score indicates the probability of manipulation for financial irregularities. According to the M-score model, if the M-score model is below minus 1.78, the company is less likely to be a manipulator. Looking at the Cochlear M-score, we can observe that they consistently remain below their threshold of minus 1.78. This suggests a low likelihood manipulation of on financial irregularities in this company's financial statement. And with this score required variables, we can see that due to the high market cap, this score falls significant outside the typical range. However, it provides insights into a company's financial stability with high value indicating a lower likelihood of bankruptcy. So, in conclusion, the Cochlear company has developed steadily and has several incredible accomplishments in the healthcare industry with the goal of improving the quality of life. And though for those who have hearing loss, Cochlear has developed several groundbreaking technologies that enable users to communicate more effectively and enjoy better audio. So this is our reference. So this is lead to the end of our presentation of us today. So thank you for listening.